We use our phones to order food, share our stories, and so much more. SDCCU made banking from your mobile device easy too. You can do so much. Get up-to-date account balances, deposit checks, and more, safely and securely, all through the convenience of your smartphone. Get all of this and more with free checking with e-statements. SDCCU, it's not big bank banking, it's better.
Hello, everyone. I'm Luis Cruz, Community and Public Relations Director for the San Diego Union-Tribune. Thank you for joining us for this special Together San Diego webinar sponsored by SDCCU. San Diego County Credit Union is proud to be one of San Diego's largest locally owned financial institutions. As a not-for-profit credit union, wholly owned and operated by its members, SDCCU believes that people come first and profit second. SDCCU's commitment to its products and services, customers, and community has propelled them to become San Diego's best credit union. This is the final webinar in a three-part series with NAHREP, the National Association of Hispanic Real Estate Professionals, exploring Hispanic home ownership in San Diego and how to conquer the complex home buying experience. Joining me today to discuss how to navigate buying a home in the San Diego market is Realtor Michelle Tramel with Mission Realty Group and a member of NAHREP North County, San Diego, and Gabe Mendez, a board member of NAHREP La Jolla. The Gabe Mendez Group is ranked 50th in NAHREP in the nation. Gabe is also ranked top 1% of all licensed agents in San Diego per the San Diego Association of Realtors. Thank you both very much for joining us for this important discussion today.
Thank you for the invitation.
Luis, it's a pleasure. Gracias por todo. We're happy. We're excited. Let's do it.
Yes, looking forward to it. For those of you who are tuning in, we want to thank you as well. This is meant to be an interactive discussion. Please remember to put your questions in the Q&A field so we can clearly see the questions and be able to keep track of them. Michelle and Gabe, briefly tell us a little bit about yourselves, how you got into this field. Michelle, let's start with you.
Thank you for the introduction. Good morning, everyone. My name is Michelle Tramel. I'm part member of the NAHREP North County, and I'm also the team lead for the military home team and with Mission Realty Group. I got into real estate 4 years ago, went to the home buying process and then just get passionate about the process and want to learn more, got someone to push me in the industry. And now we are here with this trouble.
All right. Thank you, Michelle. Gabe, how about you?
I love that. Luis, so my story is a little different. My friend introduced me to real estate back in 2013, and I became a transaction coordinator for him. And through that process, I was looking at all the files back then. I was noticing that a lot of these families were going through notice of defaults and trustee sales. And when I asked him what happened, he had told me that a lot of them were victims of predatory lending. And so when I learned that, it sparked something in me because my mother's first generation from Mexico, we bought our first home in 2006. We lost the house in 2008. So we went through the whole thing. I didn't know at that time as a young kid what was happening. But when I was reading these files, going through the transaction coordinating process, it clicked. I realized that my mom had gone through what all these families were going through. And so that was March of 2013. I vowed to get my license. I got it December of 2013. And I told myself that I was going to be the person who I would make sure that never happened to any of the mother, any of the child again. And so I advocated for first-time homebuyers, specifically Latinos. That was my message. That's been my message since 2014. And I've had the pleasure of helping a lot of Latino families, first-time homebuyers. That's really my bread and butter. But that's why I got started in the industry. It was beautiful how it was all orchestrated, and now we're here.
Yeah, no, that's a great story. And I do want to get back to that because you've experienced the ups and the downs. And so you have experience with all of it. And it's a scary thing, I have to say, when you first buy that first home. So I do want to circle back on that. But I do want to touch on what are you both currently seeing in the housing market, specifically in San Diego County at the moment?
Ladies first.
Michelle, I think you're on mute there.
Do you hear me?
Yes. Okay.
So I feel like this is a very important topic to talk right now, especially with what everyone we are seeing on the market. My team and I specialize first in VA home loans and first-time home buyers. So our goal is to educate sellers and buyers appropriately with all the information that's the main key, to have a successful transaction. So when it comes to sellers, we've been seeing that the market has been increasing, the dates that the houses are in the market are increasing a lot, as well as we are seeing a lot the prices dropping, consistently. For example, I have a property up to North County that has been on the market for almost 30 days. And with the difference that another one in Chula Vista, this one sold on the first 5 days on the market. Multiple offers, we got an escrow way above asking, but my property and North County is not selling. So we already dropped, the price a lot. But with this being said, I think it's very important pricing your listing right, especially in this timing. Why? Because this is going to be a very important factor that what's going to happen with the property, right? We can see properties that are overpricing and staying on the market for 30, 40 days. And if we see another ones that we listed just right or the listing market value, and they go in really fast. So with this being said, with the comings to buyers, I love to educate buyers about coming with a fair price, especially to come in strong with the offers. And of course, as a buyer's agent, I love to asking for sellers concessions, right? Especially right now, if we can get this closing cost cover, or we can get the buyer some money to buy the rate down, it feels like we are getting on a better market pretty much.
Okay. All right. Thank you, Michelle. So, mortgage interest rates are still pretty high, and Gabe, what are you seeing in terms of what should we know about the current housing market?
It's normal. It's normal. It's what we're supposed to be, Luis. And I'm telling a lot of our clients, this is what a normal market looks like. If you were a homeowner the last couple of years, you were spoiled. And I think everyone kind of got used to that market. But interest rates right now are where they were pre-COVID. So before COVID happened, interest rates were right back then, and people were transacting the entire time. And so I think what has to happen, Luis, is we have to go out there as professionals and educate the market, let them know this is a normal market. We're supposed to look like this. We should have listings sitting on the market for 25 days, 35 days. 5 days on the market was not normal back then. It wasn't healthy for both parties, and it wasn't sustainable for the economy. So right now with interest rates, they're back where they should be. We are seeing a healthy balance. I do think that I don't see values dropping. I do believe that we have what's called a deceleration of appreciation. So homes were appreciating 20-25% annually. It was large, but now the depreciation has slowed down. So now we're starting to see that trickle back. So whereas a home was selling for $50,000 of asking price before, it's now selling right where it should be. And Michelle's right. You should be pricing your listings properly. As a homeowner, your objective is to price it at the current market. And Michelle's a strong agent. I'm a strong agent. We tell our clients all the time, this is a completely different market. We can't compare your listing today to the market that was back in January or February. We actually have to use different comparable methods. And we're using active properties, pending properties to determine list price. So that's important as well. I was doing some research and talking with a few friends of mine. We're anticipating that appreciation will continue over the next few years. And we're also anticipating that over the next 12 to 18 months, interest rates will eventually come back down to a manageable rate. That will happen. And specifically for San Diego County, we have some of the best industries and job opportunities here. With our military bases and with schools and universities and some of the professional industries that we have, prices in San Diego will always continue to go up in perpetuity long term. If you take any 15-year graph since we've started recording home sales in San Diego County, yes, we've seen dips over time, we've seen prices drop, but we've always seen them recover. So my last point that I'll make is this. Families who purchased a home in 2005, 6, 7 at the height of the market, they're selling today at a profit. It's not a buy and sell game, it's a buy and hold. And if you hold on long enough, you'll see the return in San Diego.
Yeah, I was going to say, you talked about the increase in mortgage rates. What would you say, again, to someone who is waiting for the rates to lower and is currently renting?
Well, I'm sure Michelle's heard this one before, and we've used it all the time in real estate. If you're renting, you're paying 100% interest. 100% interest. Not only are you paying 100% interest, you get no tax benefits, you get no appreciation. It's just renting doesn't make sense in San Diego at all. You need to get into a property. Even if you dislike the home that you own, that's okay. Because in 1 year, 2 years, Michelle and I can come back, help you sell that property at 10 to 20% equity rate. And you can use that money plus whatever you've saved and use it as a larger down payment to buy your forever home. So don't try to outpace the market. In order for you to keep up with a 5%, 10% appreciation rate in San Diego, you'd have to earn 5 to 10% every single more in your income. And that just isn't happening. We're not seeing that with wages. They're not increasing that quickly. You're not going to outpace it. So if you're renting, stop, give Michelle and I a call. We'll put you into a home. 12 months later, we'll sell it and get you something better.
And honestly, it seems like it's scary as a first-time home buyer, because when my husband and I bought our first house, the rate was a 4.5. And this was in 2017. As Gabe mentioned, the rates, a 4.5, 5% is a normal rate. The thing is, it's really easy to get used to the good things, right? Because I was the first one when I saw the rates drop to 2.25 and refinance my house, clean up that VA entitlement and get into another house before the rates get crazy. And right now I'm so happy that, I have someone in my property that's paying for that mortgage and half of my new mortgage, because they don't want to buy. And I always talk to them and try to educate buyers. As I gave it, say, if you keep this property at least 3 years, you're going to make money. It doesn't matter what. Don't focus on the rate. The rates are going to change. I hear this meme on Instagram that don't marry the rate.
Marry the house, date the rate.
Yeah, that one.
Yeah.
But it's true. It's very scary. I know that, getting a higher monthly payment also is, worry, but you are already paying, $3,000 or $5,000 in a rent. I get a lot of the military families coming to me and asking for rental properties on a budget of $5,000. No, even my mortgage is $5,000. So I'm like, how you prefer to pay someone else's mortgage when you can pay your own mortgage? But I feel like all this is just education. If we come in with the buyers with the right education and sellers, we can always, make it easy.
Yeah. So actually, that leads me to my next question. So let's say I want to buy my first home, but I'm not familiar with how to go about doing it, especially in San Diego. It's very intimidating. What is your advice? What should I know first before I go in and try to buy a home? What's your advice?
So we'll share this question, Luis. The thing that I tell everyone first is give us a call. Give us a call. Let us explain to you. And the process of purchasing a home is a lot easier than most people think. So all you'll need is 2 years of tax returns, 2 years of your 1099 W-2, 2 most recent pay stubs, your 2 most recent bank statements, and then 2 forms of identification, and an established credit. If you have those items, then you are automatically on track to purchasing a home. Once you have those items gathered, let's sit down, let's have a consultation. It takes about 45 minutes. This is where myself and my mortgage partner, we review all of your information. We review your credit, your income, your debt. We calculate your debt to income ratio. And once we have your entire file in front of us, we're then able to tell you, you do qualify or you don't. If you do qualify, we let our clients know then and there, these are the programs that are available to you. And these are the pros and the cons of the different programs. This is what your payment will be. And if you don't qualify, we let our clients know, Luis, that here's what's holding you back, but we also give them a game plan on how to fix it. So for example, if we have a client with a lower credit score, we have to get it up. We'll let them know in the next 90 days, what we need you to do is to get added as an authorized user to one of your friends or family's accounts. It'll automatically boost your score, keep all your credits under 30%, all of your usage. And then in 90 days, we'll check back in with you. And as long as you've done that, you'll qualify for this. So gather your 5 items, reach out to us. We schedule a consultation. It's 1 hour and it's complimentary, and we give you all the information you need. And when you meet with us, you're either approved or you leave with a plan to be approved in the near future. And then when you're ready, we help you make that decision. It's that simple.
Michelle, anything you'd like to add to that?
Same thing. First step is meet with a realtor. We always educate our buyers. You will be surprised that many people don't know the different products that they can use. And of course, different ways to get their closing costs, down payment, or, people is just scared. At least my family, they have living in the States for over 40 years and they never bought properties just because they was scared. Nobody told them, or a friend of the friend told them, don't do it. You can lose their house. You need a ton of money. So right now, so many products that they can use, especially for first-time home buyers. So if you are thinking of buying a house, at least, even if it's not right now, I have buyers that they meet with us, that they want to buy in 6 months, in a year, or they are just saving money. We always make a game plan, right? Even if it's today, tomorrow, or 6 months, we want to help you. But the first step, of course, is to call us. If not, how are we going to contact you?
Okay, I do want to ask you about some of you mentioned programs to help, especially first-time home buyers. So I want to circle back to that as well. But Gabe mentioned the housing crash of 2008. There's a question here. I keep hearing that there's going to be a housing market crash. Is it worth waiting to buy right now?
So good question. Obviously, no one has a magic ball. We can't let you know what the future is going to be. What we can do is look at the data and tell us what it's indicating. So we have been in an economic recession for the last couple of months. That's where our gross GDP has been down for 2 consecutive months. That's already happened. But an economic recession does not directly correlate to a housing market crash. Those are 2 separate things, and they can't affect one another. So to answer your question, are we going to have a market crash? We don't see it happening. The data isn't indicating that. Right now, regulations to qualify for loans, they're pretty strict. You have to meet the minimum standards. And we do have underwriters reviewing it. We have the bank reviewing everything. And so in terms of qualification, most of the borrowers, all the borrowers out there are qualified. We have people with FICO scores that are meeting the requirements, income requirements, and all of those things. So in that aspect, no. We're also not having faulty loans like we used to. That's not happening. And you also have to keep in mind what caused that crash in 2006 and 2007. A lot of it were faulty loans. A lot of people who couldn't afford, a lack of education. That's not happening in this market. People who are buying in San Diego specifically can qualify for what they're purchasing. And there's a very strenuous process that they have to go to in order to qualify. So to answer the question, as of right now, none of the data is indicating to us that it's going to crash. My recommendation to you right now is don't time the market like most people try to do. If your objective is just to buy a home and to build some, to have a place for yourself in the near future, you want to build some wealth over time, and you don't consider yourself a flipper where you're buying a home short-term and trying to sell it. You don't consider yourself a wholesaler where you're selling the property, you're holding a contract. If you're a normal person like myself, and all you want to do is buy a home and live in it, then don't time the market. That's one of the worst things that you can do as a traditional consumer. Buy the property, and here's how I answer the question if someone's ready to purchase. 1, do you have stable income? If the answer is yes, then ask you the second question. Can you afford the payment? If you've budgeted and you can afford the payment, you've accounted for the vacations, you've accounted for your kids and going back to school clothing and all those things. If you've accounted for all that and you can comfortably afford the monthly payment, then it brings me to my third question. Are you emotionally ready? Because it does take a level of emotion to get moving forward. If you're yes to all 3 of those, get in the market now. There's nothing that should be holding you back. And then let's sell it down the road. And remember, last thing is this. Let's say everyone's wrong and there is a market crash in the next 18 months, 12 months. Is your employment stable? Yes. Can you comfortably afford the payment? Yes. If those 2 things are still true and we do have a market crash, the house is a house. It doesn't matter if the value is $0 in 18 months because it still has 4 walls. It still has a roof. It still has electricity and water. You still have a place to sleep. The value doesn't mean anything to you as a consumer until you sell it. Don't sell it. Hold on to it. And then when the market appreciates again, reach out to me and I'll let you know when the right time to capitalize on the market will be.
Well, and you mentioned, don't try to time the market. I think another way to put that also, and you kind of alluded to this earlier, the San Diego market, always hot. It seems like prices are always up there. Do you expect, even if there was, I guess, a downturn in the economy, would you expect prices to fall dramatically in this market, in San Diego County?
I would say at most 5%, maybe 10 at the absolute max, but no more than 10. 5 to 10% is where I'd see it drop. And even if we did see that happen, you would see the interest rates increase. So there's always this relationship between prices decreasing or increasing as it relates to interest rates. So historically, what we've seen is if prices do drop, we notice interest rates increase. And it doesn't really matter. So 5% decrease, 10% decrease, you're still going to have an increase in interest rates. And that's a higher monthly payment. You're paying more upfront interest. So when you're trying to time this thing, it doesn't really matter. And if it does happen, I think that's where we're going to be. But Luis, we are still behind on inventory. We don't have more inventory today. We just have inventory that's sitting longer. And that's something that most people need to understand out there. There's not more houses for sale. There's just the same amount of houses sitting for longer periods of time. Mm-hmm. And we're still very behind on the amount of homes that have to be built. So if we look around the entire county and specifically San Diego, I'm not sure about the nation, but specifically San Diego County and Riverside, we saw a lot of homes in Riverside. We're noticing construction everywhere taking place. We are so behind on material. We are so short on labor. We are so short with an inventory of property that we can't build them quick enough to fulfill the demand that we have. So do I think it's going to happen? No. If it does, 5%, 10%. However, you will be hurt with that because you will see an increase in interest rates and it will affect you negatively. So,
okay. Yeah. Michelle, anything you'd like to add to that?
Something that I always mention to my clients is that the perfect time to buy a house is when they are ready. Like Gabe mentioned, is nothing to predict. Like you need to buy tomorrow or, the next month. We don't know what's going to happen either. Especially for me and in our business, I want to say I slowed down for like 2 weeks. And then I was like, cool, I'm taking a break, I'm on a rest. And then all the buyers start coming. And I feel it's because they are realizing I work with a lot of people that's coming out of the country or out of the state. And like I was mentioning early, the rents keep going higher and higher, and that is not changing. But if you wait, when it's going to be the perfect moment, probably it's never going to happen. I have clients that they has been living, in base housing for 10, 20 years, and they're still waiting on the perfect timing. And I'm like, it's not going to happen, right? So I feel like right now, who they should be a little bit more worried as the sellers that try to get top dollar for the property, because the market is changing. And if you are not listing the house and you are not calling me right now, this house is going to stay on the market for longer.
Gabe and Michelle, you're both members of NAHREP. What percentage of your purchases last year were from Latino home buyers?
So my personal percentages was close to the 70 percentile. So it makes up a large portion of makeup of my business. So last year we sold 101 houses in Riverside, Orange County, and San Diego County. So we worked pretty much all the Southern California region, and about 70% of the sales that we had were all Latino, and about 50% of those Latinos were first-time home buyers and first-time home sellers. The big makeup for us.
For mine, I will say around 10%. I do talk to a lot of Hispanic buyers, but it seems like they are always, it's always something, they make them scared. But around 10% of my sales the last year.
Yeah, I think it's a cultural thing too. I mean, like you said, it's very scary. We feel like, well, if we don't want to get in debt, we want to be able to pay it off. And in San Diego, that's really hard to do. So we know owning a home is a path to generational wealth. So then why aren't more Latinos purchasing homes?
Michelle said it best earlier. It's a lack of education. That's literally the answer. That's what it comes down to. And
it is true.
Yeah, right, Michelle? I mean, it's really just coming down to people just not knowing the information.
I mean, you mentioned that your parents bought a house. Like I say, my parents work here. My dad's already retired. Hopefully he don't hear me because he's on my back. And you know what? He come to the States when he was like 16 years old. He worked his life here. He already got retired and he never bought a house.
Yeah.
I was the first person in our family buying a house here, and my brother. And like, I was saying earlier, it's just education. We don't have a lot of information where to start. Or sometimes we are just ashamed to go and ask for something because we feel like talking to the realtor is so difficult, but we are so cool and we are here to help everyone. It's just, I guess, the motivation to start getting in depth, like you mentioned.
Michelle, that actually, you hit a really good point. I didn't even think about that. A lot of clients that I do talk to are extremely hesitant to even approach me in the first place. They're embarrassed about their credit. They're embarrassed about their income. They're embarrassed about their situation. And that's a big portion of it too, Luis. Unfortunately, they just have this false humility, I think it is, where they feel like, I'm not worthy about, but that's not the case. So I'm really grateful for being part of the NAHREP organization for the last year and everything that Gary's doing, because we're making an impact. It's really happening and we're seeing it across the nation. So, things like this really do help.
Yeah, no, you're right. It's important to, and that's why we're doing these webinars, is to, inform people and educate people. I can totally relate with Michelle as well. I mean, my parents came here when they were young and worked 50 years and rented the whole time. And you look back at, what we could have done as a family and during that 50-year time span, and what those what a home would have been worth now. So yeah, you kind of like, but fortunately, my brothers and I were able to eventually own our own homes at some point. So extremely grateful for that as well. Speaking of Latinos, or not just necessarily Latinos, immigrants in general, do you need a Social Security number to buy a home?
No.
And so what I guess, and are there loan programs available for someone who doesn't have a Social Security number? Gabe, let's start with you.
Yeah. So no, you don't need a Social Security number. So please put this on replay. Let your friends and family know you do not need a Social Security number. All you need is an ITIN number, an ITIN. And once you have that established and you can prove a 2-year work history, some banks are becoming a little more lenient with a 12-month work history, but as long as you can prove it, either W-2 wage earner or as a 1099 independent contractor. So if you have a family member, if you have a friend, someone who runs an independent business, perhaps they run an independent landscaping business or pool cleaning service, a lot of those type of industries, salon, hairstylist, nail tech, all of those industries qualify. Give me an ITIN number, show me 2 years of work history, and I'll get you qualified and I'll put you in a home.
Michelle, anything you want to add to that?
No, just the same ITIN number. Getting the right lender is actually very important. I want to mention that not all the lenders specialize, in doing this type of loans. Mm-hmm. And just the same, as any another lender, I always recommend my buyers to not go to big institutions, go and talk with a private lender. And if you are scared, of the language, just go with someone that speaks Spanish. Especially when I bought my house too, I prefer someone that speaks Spanish because I have a ton of questions, and it was really scary to get in depth with the house for $330,000. That when I convert the money to pesos, I was like, I was never gonna do that. It's true, and honestly, most Latinos, we coming from the same. For me, it was really scary. I was not working. Thankfully, my lender speaks Spanish because I have so many questions. And right now I told my husband, don't worry, let's get another house. We own already 2 million, but let's go for the next one.
All right. I do want to touch on investment property if we have a chance, but let me get to some Q&As here from the audience. What are some tips or resources for young people as they strive towards home ownership?
Michelle, do you want to take that?
You can go ahead.
Yeah, Luis, thank you for the question. It's simple. We mentioned it a couple of times already here. And what we want everyone to do, the tips to get ready for it, is schedule your consultation. That is it. Let me give you guys an analogy that perhaps will land a little more clearly. Let's say that you have an injury or something is happening with your body, and you know that you have to get it fixed eventually, right? AKA you have to buy a home pretty soon. Everyone's doing it. You know it's the right thing to do. And then you go meet with your doctor, and you don't tell your doctor how you got hurt or what hurts. Or perhaps your doctor says, oh, you're in pain. Here's the surgery or medication that you need. However, they haven't done the MRI or the X-ray. They can't properly assess you, is my point. If you want an accurate answer, you want a proper assessment, then you have to sit down with a professional and let us perform the X-ray on you, AKA let us look at your credit score. Let us look at your income. Let us look at your debt, even though you may not even qualify and you know it right now because your credit score is 480 and your income is maybe under what the minimum requirements are for a certain type of loan. That's okay. How are you ever going to be on track to get the right plan if you don't sit down with us? So call Michelle and I. Let's schedule a consultation. It's 45 minutes. It's complimentary. Bring everything in. We give you the answer. And then now you have a roadmap. Now you know where to go. Now you know how to get there, which turns to take and what not and what to avoid. So that's the answer to the question. It's very simple. Give us a call, schedule the consultation, and let us guide you.
All right. So I know you want folks to call you, but we have a question in the Q&A field, and I'm curious to find out how you're going to answer this. Many of my friends have used realtors that were referred to them. What's the best way to pick a realtor? How many should a new home buyer consult with before choosing one? And what are the most important things to ask? Any red flags to look out for?
Really good question. And I see Michelle smiling. Michelle, do you want to start with this one?
You know what? Something that I always mention is working with a realtor is like dating. You need to make sure that you're working with someone that is listening to you, is understanding, and of course that they are, you guys pretty much are you have the match. Just from my previous experience, I worked with someone that in the end, I never hear, I got a ton of problems. So I will say, make sure that you interview agents is not the exactly number to tell you 1, 2, or 3 realtors, but make sure that that person is actually listening at your needs, right? You don't want to get approved for 500,000 and someone that's showing you houses at 700,000 in the different areas. At least for me, I show the houses to my clients, the houses that they want to see. I do send them properties that I think they made the criteria, but I never push them to find, something that they don't want. So just make sure that you have a good communication with your realtor, and of course that they understand your needs, and that is your good match pretty much.
Yeah, and I'll add to that too. I love that analogy. I think you have to date the person, understand it. Here's my response to that question in terms of how to pick a good real estate agent. Number one, you do need to do some research. You have to get your referrals from people that you do know. That's the first thing. I would advise you to go on Google, go on Yelp, and then talk to some people that you trust that have used some real estate agents in the past. That's the first thing. So you gather your data. Who do you find? The second thing is make sure they have a consultation prepared for you. You want an agent that's going to prepare you for what's to come. And at the very minimum, they should be able to sit down with you and say, okay, here are the expectations. This is what you can expect to happen. Here are some pros and cons. And they should be able to guide you from a neutral standpoint, not an answer and not giving you information that's based on what benefits them, but as a consumer, what should you be looking out for? Here's the third thing that if they don't have a consultation, that's already, in my opinion, a big red flag, because how are they going to properly guide you without information already structured to guide you? The third thing is this: you're looking for a real estate agent that has experience. You want someone who is who's experienced with negotiations. If you want someone who's experienced in contracts, a huge portion of our job that a lot of consumers don't understand are contracts. We have to be able to understand as licensed professionals these contracts that were written by attorneys who work for the state of California, the Department of Real Estate. They wrote these contracts, passed the bar exam. Us licensed real estate agents are expected to master and understand those contracts. So you have to find someone who understands all of the paperwork, all the details, all of the deadlines, all of the implications that might put your earnest money deposit in you at risk. So you want the negotiation, you want the experience of the contract, and the last two items are this. You want someone who's known in the industry, because this industry is not just what you know, it's also who you know business. And there's been a lot of times where I've worked with other real estate professionals and I've had an offer accepted because the agent on either side says, hey, I know you, I know your company, I know how you work, you have good reputation, and you're going to make this easy for my client and me. And so we put a deal together because of the reputation. And that's also a huge aspect. And then last one, the fourth, and I think this is also really important, it's just someone that you vibe with, someone that you get along. You're like, hey, I like this person. It's okay if you just want to use someone to get the job done, but you're going to be talking to this person a lot. You're going to be texting. They're going to get to know your children, your family. You might have a drink afterwards. So just make sure you're vibing, having a good time. If I were in your shoes, that's how I would go about identifying the agent to work with.
All right, lots of good advice. But is there a figure? I mean, like, should we talk to several realtors before we pick one?
Yeah. Yes, I would say you'd probably want to talk to 2 referrals from people that you trust, and you'd want to find 3 agents online from doing your research. So go on Facebook, go on Yelp, go on Google Business, type in San Diego Realtor, see who populates, look at their reviews, look at their profile pages, check out their social media pages, and just find out a little more about them. Are they someone you can trust? Are they experienced? Do they have good relationships in the marketplace? And is it someone you can vibe with?
Okay. Michelle, how are you helping buyers to get their offers accepted in this market? I bet. Michelle, I think you're on mute again.
Do you hear me?
Yes.
Sorry. I've been helping buyers, but educate them about the market condition and the process. Also by building a good communication with the notary agents, because like Gabe mentioned early, this industry is based on relationships, right? So sometimes it's good to call a notary agents and see where we are. You know, honestly, sometimes we have buyers that they have different expectations. Even if you set up your expectations on the beginning, they just want to do whatever they want. So it's always good to keep that communication with the notary agents to see where your buyer have to be or what's the seller looking. That way, you know, we can have our buyers in a better way.
Yeah, yeah. Gabe, how are you doing things differently that help you stand out from other agents in the market?
Education's huge. You must sit down first and properly set expectations with the client. That's the first, because ultimately it's their decision of whether or not they want to buy the home. However, if you don't guide them and let them know what has to happen first, they're never going to know if they're on track or on par with where they're at. Everyone's always asking, is this the right price? Is this the right home? How do I gauge it? Well, you take all of the data that we have and we come up with an overall average answer. So we tell our clients, this is normal for today's market. This is where you should be. This is what you should be expecting. So the education is the first thing. The second one that we're doing is the second I think is also really important. We're running sales comparables. So we don't just, with our agency, we don't just look at a list price on a property. And if that's what the agent wants, then we go back to our client and tell them this is what you get. Absolutely not. The first thing we do is run sales comparables in the area. This is exactly what a licensed appraiser will do that works for the banking institutions. They'll look at the sales comparables and they'll compare the subject property to homes that have sold recently on the market, homes that are pending in escrow, and homes that are currently active for sale. That data tells me as a licensed professional everything I need to know about the home. The second thing that I do is I pick up the phone and I call the listing agent. Hey, where are you with the offers? How many offers do you have? And that's where the negotiations begin. And this is how they both intertwine with each other. And this is really important. So if everyone could just give me 2 minutes just to explain this concept. Mm-hmm. The first thing is this: if we're looking at the data, let's say I have a client who wants to purchase a home that's $750,000 and the home is listed for $750,000. I'm not just going to offer $750,000. Let's look at the comparables. If we have homes that are actively listed in that area, and they're active for, let's say, 725, 735. And let's say we have a cluster of them, maybe 3 to 5 homes for sale. The first thing I'm going to do is I'm going to look at the days on market with all of those listings. If the days on market for those active listings are higher than the average for the county or for that specific neighborhood, then I know the subject property 750 is way overlisted. Shouldn't be that high, because the other active listings are already over the average market time. This is telling me that buyers aren't paying that price. So with that data there, I can then go back to my client and tell them, hey, listen, look at the data. There's no way that we're going to pay this much. Let's offer 700,000, substantially lower. And they might say, Gabe, why do we do that? The data is telling us that. We call the agent on the other line and we ask them, how many offers do you have? How long have you been on the market? What are your sellers looking for? Right off the bat, we can tell whether or not they're telling us the truth. If they might tell us, hey, we have multiple offers on the home. We're going to be selling it pretty quickly. Right, Michelle? Exactly. Yeah, they're going to say, oh, we have so many offers. Then we look at the data and the data tells us something completely different. I'm like, no, I hear it in your voice. I see the data. Doesn't make any sense. I go back to my client. I can confidently tell them. Secondly, what if those properties were under days on market and then under the average? And then I look at the pending properties, ones that have already accepted an offer. And all of those homes have gone into contract under the average market time. Then it indicates to me that this is a hot neighborhood. We don't want to play around with this property. Let's look a little deeper into why they're buying at this price. And then lastly, sold properties in the last 60 days in this market. Are they selling under market average or are they selling above market average? That's also going to determine my recommendation to the client. So we take the data, I take the phone call conversation from the listing agent, and then with my experience in the last 7 years selling hundreds of homes in Southern California, I go back to my client and I say this, here's the data, here's how I interpret it. Here's what the listing agent is telling me, this is how I interpret that. Based on the information to get your offer accepted and to get you the best deal, here's what I recommend. It's ultimately up to the client to make that decision whether or not they want to do it. And that's the way that we prep our clients to get the best offer and get it accepted.
All right, thank you. Lots of good stuff there. All right, we have about 15 minutes to go, so let's get back to some Q&A from the audience. We are retiring in the next 5 years and have a substantial equity in our home. How can we take advantage of our home wealth without leaving the area?
So you can refinance, pull some equity out of the home if you have substantial equity. Number one, the first thing we want to look at is what's the average rental in your neighborhood. If the properties are renting substantially higher than what your mortgage is after the refinance, then we can refinance, pull some of your money so you can use that to go help retire and do what you want to do with that. That's number one. We have to look at the number. The second thing is perhaps you sell it. Sell the home. As long as if you're a married couple, you're exempt up to $500,000 from paying capital gains tax. If you're a single person, you have substantial equity, you can sell your property and gain up to $250,000 in the state of California, and you're exempt from paying capital gains tax. So whether you're married or single, that'll change my strategy with you. The third thing would be, I would say perhaps converting your garage into an ADU, and then I would rent both properties out. I wouldn't refinance. Maybe I would rent the main home, I would rent your ADU in your garage, and now your profit margin, I'm sure, is going to be substantial. You take that profit margin, you go find another home with your retirement and this profit margin here. We can use that as income with your retirement money and go find you another home to go live in. Maybe downsize, you can go upsize. The strategies are all different. It really just depends on a lot of factors. So give us a call and we'll help you sit down and navigate through those.
Michelle, you mentioned it sounds like you bought or you made one of your properties an investment property, a rental. At what point do you make that decision? It's scary enough buying your first home. At what point do you pull the trigger and say, I'm going to buy a rental?
You know what? We was actually not looking for, we was not looking to buy another house. With COVID, obviously, we'd hate our house. It's only my husband and I. We have this townhouse, 1,700 square feet, 2-bedroom, 2-bath. We already walk all over, and this thing is not growing. So I told him, we need to take advantage of the rates right now and just go in and find another house. So we do refinance our property into, I remember it was a conventional investment property. And then we find this short sale on the market that was listed way below the market. I remember the day we was in a restaurant and I'm like, look at this house, we should go and see it. When I come to the property, this house was already under contract, but I don't keep up. I'll call the agent and I'm like, let me be a backup offer. So 3 months later, the agent called me and say the another buyer, got tired of waiting. I'm like, I'm not in a rush. So we refinanced the property just because the rates went down. And my husband is a veteran, so we decided to clean up the VA entitlement just because in case that we want something bigger. And yeah, that would happen. The market, it was good for rentals. So my mortgage over there is 1,800 and my tenants are paying 3,300. So I'm telling you that they are paying my mortgage and half of my new mortgage. So it's just to see, right? I don't want to say the timing, but the way to make extra income with your already properties. I want to get retired at some point and I want to live from my rentals. So looking to buy my third property, hopefully this year. But yeah, it's just, like this person is asking, they are looking to retire and they have so many options. The good thing is they already have good equity in that property. That is the more important. So the options is going to be a lot like Gabe mentioned early. So it's now just their decision to go buy, sell, or refinance, get money, buy another one.
Okay. All right. And Gabe, any other advice to kind of, I guess, put your toes in the investment world?
I did exactly what Michelle did. We disliked where we were living. We weren't planning on buying a home, and COVID happened. Our lease was coming up for the place that we were renting in Imperial Beach. So we started looking at places to rent, and the rent at that time was $3,500 for a 3-bedroom, 2-bath home in Bonita back then. And we're like, that's way too much money to rent. Let's just go look at numbers. And so my wife and I decided to talk to our partner. He's a mortgage lender. He's a mortgage broker. So he works with hundreds of banks across the nation. Sat down with him. He got us pre-approved in 1 hour. And it was way more than we thought we could have been approved for. And we could afford the monthly payment. So we bought our first home August of 2020. And then last year, we purchased our first investment home. And that was also an accident. We were just looking around and we saw this home online. We're like, oh, that's my 3-bedroom, 2-bath, that 2.5 bath, a 2-car garage, washer and dryer inside the unit, gated community. I'm like, babe, like this looks really good. And she agreed, called my buddy up. Hey, can we qualify for this investment home? He said, absolutely. And I looked at the mortgage. I looked for how much it was renting for. It's near the college area. And we picked it up. We immediately listed it on Zillow to get some tenants. We put them in there. My buddy owns a rental property management company. So they're managing it for me. I did zero to the whole thing. All I did was put the money in for the down payment, use my commission and negotiate my closing costs. So just the down payment, we found a tenant. It's been running ever since. And it's a pretty substantial profit at the end of the month that we're making, and we're not doing anything with it.
Wow. Okay. So that leads me to my next question. What are some areas in San Diego County or Southern California that are maybe more affordable that you might recommend, maybe a first-time home buyer looking into, or maybe someone who wants to invest in their first rental property?
My 3 favorite places have always been San Isidro, Spring Valley, and City Heights. I love those places. I love the growth that's taking place in South San Diego, all the development, all the infrastructure, the schools, the strip malls, the freeways, the highways. There's just so much happening in the commercial space. I love that. Spring Valley has always been a really good place to just kind of get into, build your wealth over time. It has amazing views at the top of the hills. And in City Heights, they're gentrifying it little by little. So there's only, we're moving from Logan Heights closer inward to the inner city. And it's next to San Diego State University. So you're right in the melting pot of all of it. I love that area. I think it's a great place just to get entry-level investments and just build from there.
Michelle?
I will say depending what the buyer is looking. I have a lot of buyers that they need more house and they can get a little bit more for their money in areas like Temecula, Marietta, Menifee. I live in Alta Mesa, so I know San Isidro is growing so much. I love to be close from Mexico. And Santee, Lakeside, they are growing a lot too. And I will say Barrio Logan. I'm impressed to see what's happening in Barrio Logan. In Pearl Beach as well. When I got here, I remember the Ivy was like the ghetto, and right now you go over there and houses are 1-2 million, and there's no way that you get something cheaper. Right.
Yeah, it's kind of good to know like what the locations that you suggest, because I guess from living in San Diego for over 20 years, Yeah, I'm like, oh, I wish I was able to have bought back in the day. All right. Yeah, go.
Luis, you still have time.
Yeah, yeah. Thank you. All right.
I know a couple of realtors.
Yes, yes, thank you. What is, let's see, another question here. What's the difference between a condo and a townhouse? And is there, I guess, an advantage over buying one over the other?
I guess the technical answer is they're both attached properties, is the first thing. And the way I've grown up to learn about them is your condo is more of like an apartment style property where you have like units around you. And the townhome is like more of like an up and down. So you have one wall, shared one wall, or shared two walls. Kind of thing, but you don't have neighbors that are above or below you. That's probably the easiest way I can explain it. Michelle, do you have a similar or different answer to that?
The same. A condo is like an apartment building, pretty much. In a townhouse, depending on the layout, some are just attached to one wall, and like Gabe say, you own the 3 stories, depending the area, the building.
Yeah.
Okay. Another question here. Do you recommend getting pre-qualified for a loan before talking to a real estate agent?
Talk to us first, because we have the relationships with the banks and the lenders that you need to talk to. So Michelle and I, if you're looking to purchase or relocate, with your VA, I'm sure Michelle has that dialed into a T. If you're looking to purchase your first home and you need down payment assistance or I-10, things like that, you reach out to us first, because we have those established relationships out in the marketplace with vetted partners. So we know who to talk to, we know who's experienced, we know who can do it, and we also know who can't.
Yes.
Okay. Tell us a little bit about NAHREP and how you got involved with NAHREP. Why is NAHREP so important, especially to the Latino community?
Yeah. So NAHREP, the National Association of Hispanic Real Estate Professionals, the mission statement is really what grabbed me first. It's to advance the home ownership for Latinos and across the nation. And I really resonate a lot with that. As I mentioned at the beginning of the interview, Luis, my mother is a first generation from Mexico. My family's from Zacatecas on my mom's side. They're from Oaxaca on my father's side. And she came over, bought a home. She thought she was doing the right thing, and she tried. It didn't work out. And so when I got my license, I told myself I'd advocate for these families, make sure that never happened under my watch. And then I learned about NAHREP. Someone said, "Hey, did you know there's a movement taking place across the nation, and it's being led by Gary Acosta?" And I said, "Wow, this is great." And the moment that I learned about it, I jumped on as the board of directors, and so I've been with the chapter since 2018. I love everything they have to offer. I love the educational portion. I love the outreach that's taking place. I love all the events that happen to educate the marketplace. And that's what pulled on my heartstring. It resonated with a story that I went through, and there's a cause that I can get behind. So that's my story. I love it. It's a great place to be.
It really is a great story. Michelle.
I got invited for one of the past board members, and honestly, I love the Hispanic community. I'm Mexican, and when I come here, I have a hard time. I'm still learning English, so coming to places where I can really talk to people that speak Spanish and feel just that familia or that community, Hispanic community, I just love it. And all the events that they put together, all the support that they put for all the Hispanic community is really good.
Anything else you both, either of you would like to add before we go?
I just want to say I'm grateful for the opportunity to be here, Luis. It's such a pleasure and to be asked with Michelle, and I have great regards and respect for Michelle. She's a really well-known brand and agent in the industry. She's doing amazing things with her husband and her entire organization. So for us to be here, for myself personally, it's just an honor. So thank you for letting me do this. I want to show the recording to my mom and let her, "Hey, Mom, look at this is what you went through. There's meaning behind it. We're going out there, we're making a difference. So your story, when you moved over here, it's not for nothing. Like, I'm making something different." So just to be here with all of you, thank you.
Same, thank you for the opportunity, and of course for the invitation. This is getting out of my zone of comfort, so learning over here from the best, and nothing, just thank you for the invitation, and of course from learning from you guys too.
All right. Well, it's been a pleasure to get to know a little bit about the both of you, and I appreciate it and thank you for what you're doing to help our community. Thank you, Michelle Tramel, Realtor and member of NAHREP North County, San Diego, and Gabe Mendez, CEO and listing agent with the Gabe Mendez Group and board member of NAHREP La Jolla. Thank you, guys. And thank you to those of you who tuned in for this special Together San Diego webinar sponsored by SDCCU. We want to remind you that all 3 webinars will be available at SanDiegoUnionTribune.com/NAHREP. That's NAHREP. We also want to remind you that one of the biggest events having to do with real estate, home ownership, and generational wealth is taking place in San Diego from September 22nd through the 25th. We're talking about the NAHREP at Latitude event. That's 4 days focusing on mindset, financial management, real estate, personal business performance, and business scaling. And for what it's worth, this has actually become one of my favorite events of the year. It's always very inspiring. For more information, log on to nahrep.org. And if you have any questions, you can email press@nahrep.org. That is going to do it for us. Have a great day, everybody.